Okay, looking at Chapter 4, 2B, we're looking at some transactions and we're going to have to decide which accounts are affected. So this is kind of a repeat of what we've done, but what's going to happen in Chapter 4 is we're going to be doing things a little bit differently. Instead of putting them into T accounts, we're going to do what we call journalizing. So the first thing we're going to look at what's happened here. And it says that we invested cash in the business. So from looking at if we were looking at T accounts, we would know that we're going to debit cash account for $5,000 and then we'll credit our owner's capital for the other $5,000. Paid office rent, okay, so that means our rent expense is going to be our debit. And because we paid office rent, we're going to decrease our cash, and cash decreases with a credit. If we purchased office supplies on account, that means we now have office supplies, so we need to increase our office supplies with a debit. But because we purchased it on account, it means we have not paid them yet, but we owe them, so we're going to increase our accounts payable, and we're going to do that with a credit. Number 4 says we received cash for services rendered. Fees just is the name of our revenue account. So I received cash. That means my cash is going to increase. I show my cash increasing by debiting it. My revenue is also going to increase. The name of my revenue account is fees, and it increases with a credit. Paid cash on account. Well, if I paid cash on account, that means I'm paying out cash. So cash is going to be my credit, but my debit is going to be accounts payable because I owed them some money, but now I'm paying them, so I need to decrease my accounts payable, showing that I don't owe them as much as I used to. Rendered services on account, $300. If I rendered service, that means I earned revenue. Revenue always increases with a credit, so that's going to go on my credit side. And it says on account, which means although I provided someone a service, they haven't paid me this $300 yet, but they will. I'm going to invoice them. They owe me, so I'm going to debit my accounts receivable. Received cash for an amount owed by a customer. Okay, here they're turning around and they're paying me from transaction or from number 6. So they're going to pay me $100, so it's going to increase my cash, but I need to decrease my accounts receivable because where they owed me $300 here, now they're paying me $100. I need to show the balance they owe me is now $200. So what's going to happen is you know that I have my debits listed first and then my credits. Same like if you were to draw a T account here, your debit's always on the left, your credit's always on the right. Now when we get into journalizing in this chapter, same kind of holds true. You're always going to list your debits first and then you're going to list your credits.